think, if you would have asked me in March of 2020 how orderly I think the market was going to be,
right.
We were just worried about how we were going to function on Zoom because we had never done that before. But it ended up being very, very orderly. And so when rates were going down significantly, people were stocking up, issuers were stocking up on cash, and they were also doing refinancings. Obviously, it continued into 2021. And that's something that was noticeable in terms of the number of refundings, particularly in the taxable marketplace.
Right.
But if you look at what the composition of the market was last year, there was more new money than there had been in previous years. And I think some of that is, to your point, what came out of COVID was a lot of free federal dollars, a lot of deferral of new money projects because there was fear about what the budget situation was going to be. For many, the budget situation tended to be very good. Now, let's see what happens over the next couple of years, but a lot of those new money projects were delayed. And so over the past, call it 12 to 18 months or so, we've seen a number of these new money projects come back. It's not just the typical road repairs and street lights and that sort of thing, but some of the big projects, the convention centers, the sports arenas, the big buildings, things that were probably postponed during the COVID era and during the couple of years after that, because you know what, we need to kind of get our arms around our budget situation, or so many issuers probably thought.
Do you think there will be more refundings? Is it still economic make sense for an issuer at this point in the next few months?
Well, let's break down the refundings. There's the typical refundings, which is just high coupon, the low coupon,
right.
And that's either done in current refunding format or you're doing it in a forward refunding format. Again, going back almost as long as I can remember, Lynn, for the past 20 years, we've been a 5% coupon market. So, when those 5% coupons have come due in terms of current refunding dates, we're still well below that. So it still makes economic sense, albeit it may not make the 25% savings sense. Listen, when I started in the market, 3% was the level that you had to achieve, and that's not to say that's what somebody should or shouldn't do, but it's to say there's a lot of room in between 3 and 25% for economic value. The other part are tenders and tender refundings, and those, a number of issuers, and again, the trend really started a couple of years ago with certain issuers doing it, and then it's really caught on quite a bit. And now just the format and the way of doing it has almost become standard and commonplace, where it doesn't seem like it's such an incredible amount of work and effort to do it. And what we really see now is a number of issuers, not many will do standalone tender refundings. I've done 1 or 2 of those, and those can be harrowing because you never know how much volume you're going to get. But just putting them in addition to a new money transaction or another planned refunding is something that's pretty commonplace. And so, you had mentioned the large deals that were happening in the marketplace. A number of them are medium to decent sized deals that have been enhanced because of tender refinancings or other things that have been added on. And that's something I do think will continue going forward. And yes, you mentioned the BABS refundings, and we'll see how long those go on. But again, those are additional refunding opportunities, whether they're standalone or whether they're added onto things.
Okay. No, we know that taxable issuance, when it did skyrocket, up to 30% of the market in 2021, those were refundings, obviously with the loss of advanced tax exempt refundings. But do you still see taxable issuance having a place in the muni market in terms of, is it issuer dependent? Is it, there's demand out there, right? I mean, there's investors who are pushing back on these BABS refundings as a reason because they want their taxable paper. It's so scarce. So what do you see taxable issuance as?
Yeah, I think in 20 and 21, there's probably an artificial high, just in terms of the type of issuers that were issuing taxable bonds. Again, given my years in industry, there are various reasons why conventional municipal bond issuers, I'll call it just kind of the infrastructure issuers, would issue taxable bonds from time to time. Private use, they were refinancing previous taxable bonds, things along those lines, but they were pretty limited. Where you really saw the taxable issuance kind of accelerate over the past, call it 10 plus years, was in the healthcare and the higher ed space. In the higher ed space, in the private higher eds, I don't mean the for-profits, but the private higher eds, the Harvards, the Yales, et cetera.
Right.
And then healthcare, because it gave them such great flexibility in terms of just being able to use the money as they want, the same as the higher ed folks. And you saw a lot of that in 2020. again, particularly in the higher ed space, a number of the higher ed institutions were stockpiling money, and they could stockpile at such significantly low rates that it was almost a why not? They need it either for operations or for capital, and you kind of saw that market dry up because so many of them had already borrowed in 20. But now what you're seeing, Lynn, is you're seeing this year a number of the higher eds coming back in significant volume. You've seen that with the Harvards, the Cornells, a number of others coming back in volume. You've seen it also in the healthcare space.
Right.
And a lot of it kind of is in conjunction with M&A transactions that have become very commonplace now in the 501c3 not-for-profit healthcare market. But again, there's a rationale there. What I don't think you'll see as much of, but again, been around a long time, so you never know. I'm not quite sure you'll go back to an era when the infrastructure folks will do a lot of taxable refundings and those sort of things. Again, who knows? You never know when you have a dive in interest rates and it comes back again. But that wasn't something that we were counting on coming into this year.
Right.
We were thinking we would see a decent pickup in healthcare and higher ed, and it's probably exceeded what we thought so far.
Okay. Let's get into higher ed a bit more for our viewers who don't know. It's a sector you're close to. You are also chairman of the board of trustees at Syracuse University, so you have a pretty good understanding of higher ed. Can you talk about what is the atmosphere in higher ed generally? Give us a background, the trajectory since 20 and 21.
I like to call it my night job there, but I very much enjoy it. It's a sector I very much like. And I think I have a much greater appreciation now for kind of how the whole higher ed market works. Listen, it's a challenging time in higher ed.